Cool. Good morning, good afternoon, and good evening, everyone. I'm JP Versosa from ADB's Controls Department. Welcome to our webinar on sustainability reporting in the public sector. We're thrilled to have you join us today as we delve into this important topic. Before we get started, let's go over a few house rules to ensure a smooth and engaging session. During the presentation, we will be in listen-only mode. If you have any questions or comments during the presentation, feel free to use the Q&A function and we'll address them during the Q&A session. If you prefer to speak or ask a question verbally, please use the raise hand feature. We'll call on you in turn. If you encounter any technical difficulties, please let us know in the chat and our support team will assist you. Finally, we encourage you to participate actively. Your insights and questions are valuable to this discussion. Thank you for your cooperation and attention. To kick off this session, I would like to welcome Ms. Helen Hall, ADB Controller, to deliver the opening remarks. Helen.
Thank you so much, JP, and good morning to everybody. I say good morning because I'm sitting here in Bangladesh, but I'm sure it's mainly afternoon, maybe for some people already, but good day to you all. So thank you very much for joining us. I believe this is quite a critical discussion we're going to have on sustainability reporting in the public sector. As you will all know, achieving sustainable development requires the public sector's full engagement. Accurate, transparent, relevant, and maybe timely sustainability information is going to be essential for all our decision makers. And robust sustainability reporting and disclosure standards are vital for providing high quality data to guide these efforts, particularly so that we all are on a level playing field. So I do think it's a very interesting area to build everyone's knowledge on. Sustainability reporting in the public sector draws on progress made by the private sector. The International Public Sector Accounting Standards Board has developed standards that align with the established global private sector frameworks, such as the Task Force for Climate-Related Disclosures, the TCFD, and ISSB S1, general requirements for the disclosure of sustainability-related financial information. These standards aim to create a comprehensive framework that considers the public sector context and integrates a multi-stakeholder focus. The importance of sustainability reporting cannot be overstated. It ensures that government and public sector entities are accountable for their environmental, social, and governance impacts. It also helps build trust with stakeholders, including citizens, investors, and international organizations. By adopting and implementing sustainability reporting standards in the public sector can lead by example and contribute to more sustainable futures. I mean, some people will say if the public sector doesn't become involved, this will fail actually, because we do have the capacity to drive that change through laws, regulations, and compliance. So I very much hope that you will enjoy the next few days and that the workshop will provide some valuable insights and practical guidance on advancing sustainability reporting in the public sector. I would say from the ADB context, this is maybe step one. JP and my team have worked very hard for the last year to try and actually bring up some, let's say, knowledge sharing around what's happening in the public sector. We ourselves have been following the private sector development very, very closely because we ourselves are developing our own sustainability reporting within ADB. I think what's interesting from a personal perspective is it's been quite difficult to get the whole of a small entity working together. So I believe the challenges for a central government function are going to be vast. And therefore, I just encourage everybody, more knowledge helps you really sort of navigate the changes that governments will make, particularly, I think, largely through legislation, which will make things very, very the requirement to be compliant. And it's particularly for the accounting profession, a whole new era, because we are now dealing with non-financial information that comes with slightly different thought processes. And particularly you'll see, eventually when we start talking about assurance, all of a sudden we are dealing with people who don't do double entry bookkeeping. And therefore really understanding that we have got the right estimates, because that's what most of these will be, and the right sources of data is going to be a little bit challenged when it's everywhere in the entity. So I really am on a bit of mission to make sure that the accounting profession particularly is not left behind in what I think is going to become commonplace work for us within the next few years. So it's my pleasure actually now to hand you over to Zarif Lundin and the ACCA team. I thank them for their patience as well, because it's taken a while to get where we've got, but we're quite excited that today is starting. So I'll leave it with Zarif to introduce his team, and I really wish everybody the best across the next few days. So I'll leave it there, JP. Thank you.
Good morning, everyone, and thank you very much, Helen, for the very comprehensive context behind the sustainability reporting for the public sector. I think from ACCA point of view, we are very equally excited to be a partner in delivering not only the workshop, but as well as the looking at the outcomes of the workshop. So you have given a very extensive outline of the program. I won't go much into the details. I will briefly touch upon the workshop, and I think from the workshop perspective, if we can move to next slide, please. We're hoping two main outcomes to achieve in next 3 days. So one is that we're looking forward to be sharing our experience and knowledge with regards to the IPSASB's ESRS with all the participants that are joining us today, tomorrow, and the day after. And then in the meantime, we're also very keen to gather insight and feedback from you, both in terms of the SRS itself, but as well as to understand the landscape. So these are the two main objectives that we have. And at the end, these will be supplemented in the reports that we will be producing. So we are highly encouraging you to please have as active participation as possible. There will be, as JP mentioned, there will be a few polls survey questions during the workshop, but as well as we will be running some survey questions post workshop to get further insight to allow you to be able to share with us more insight with us. And briefly moving to the team who would be delivering this workshop. So from our side, Dr. Jens Heelings and Olga Kimova will be leading the workshop in the next 3 days, who are the subject matter experts on in PFM and as well as in public sector reporting and with regards to sustainability as well. And then myself, Sidra and Mark Johnson, who are the ACCA teams, will be supporting in the background. So without further ado, I'm going to hand over to Dr. Jens Heeling to take us through the agenda for today and kickstart the workshop. Thank you all.
Yes, thanks a lot, Zarif. Thanks for the nice words. Also, thanks to Helen for the welcoming words, and JP. Good morning, good afternoon to all of you. I'm based here in Germany, and very pleased to have this workshop within the next 3 days together with you. As you could see, the title of that seminar is Advancing Public Sector Sustainability Reporting in the Asia and Pacific region. And the workshop is actually designed in a way that we really start from scratch, so that we really try to build capacity from ground. So this is what we intend to do together with you within the next 2.5 and 3 hours. After the welcome session, we will look at the relevance and the status quo of sustainability reporting in the public sector. So first of all, we will provide some background and context for sustainability reporting. Then we will take trying to give you an overview about existing frameworks and standards. And you have probably heard it's not just a few frameworks and standards. There's quite a couple of, and what we will do is trying to give you an overview. Then we would underline the relevance of sustainability reporting in the public sector. And as Helen Hall has already pointed out, so the public sector has a crucial role to play in that. Then, of course, sustainability reporting in the public sector, it's on the move. So it's always difficult to really say this is the status quo because it's a moving target. but at least based on our knowledge, we will try to give you a status quo. And what then is important, also then coming in the next sessions, is to give you an overview of the so-called International Public Sector Accounting Standards Board. So the abbreviation for that is IPSASB, and also its standard setting process. So that will be quite fundamental for all the sessions that will follow afterwards, because the International Public Sector Accounting Standards Board, this is the relevant standard setter for this ED Sustainability Reporting Standards 1. And so therefore it makes sense to share with you some insights about that standard setter. So around 2:30, we will have a 15-minute coffee break, so where we can refresh a little bit, and then at around 2:45, we will all come back and then really go into this IPSASB ED SRS 1 and to see, okay, what is the whole project all about? What's the current project status, and what is also the future work plan of the IPSASB in that regard. What we then also want to try to do with you is to give you an overview of that standard, to tell you about its structures, touch on some major concepts like, for example, materiality. Yeah, so these will be some of the main concepts that we want to introduce on the first day. And of course, we will look out for your feedback on these proposed standards and its intended approach and its concepts. So my colleague, Olga, she will run polls at the appropriate time. And so we are asking for your feedback during those polls. Good, and at 3:45, we will have a wrap up and a closing. Good, so without further ado, I will go into the details, and as said, the first part of this session will be on the relevance and the status quo of sustainability reporting in the public sector. So probably this figure on the right-hand side of this slide, you have all seen that. So these are the 17 sustainable development goals. So abbreviation for that is the SDGs, and they got quite famous in recent years, and they come actually from out of the Paris Agreement in 2015, and the UN SDGs, they are really the starting point for national governments' commitments to sustainable development and also climate action. So that for sure, and it's of course it's not only the public sector, it's also the private sector that is touching on that development, and more so in the private sector there is also this terminology of ESG. So ESG, that stands for environmental, social, and governance, and these three topics, you can actually find them covered within the SDGs. Good, and what we have seen in practice is that many countries around the world, they began conducting voluntary national reviews on their efforts towards the SDGs. So as I said, that's the starting point, and one of the major starting points for the IPSASB to start thinking about developing standards in the area of sustainability reporting in the public sector was actually this World Bank Group report titled Sovereign Climate and Nature Reporting. So this report was published in 2022, and it significantly raised awareness and initiated a discussion in the public sector on having a dedicated sovereign sustainability reporting framework for public sector entities. So the study really found that there is an information gap on the one side for sovereign entities. So not many sovereign entities or public sector entities are reporting on sustainability information. And on the other hand side, the report also found that actually a common standard or common standards are missing. And what the report also highlighted was this investor perspective. So the report highlighted that there is also a growing demand from the investor side, especially from purchases of sovereign bonds in the area of climate, nature, and broader ESG related information. And why is that an important aspect? Yeah, this is an important aspect because sovereign bonds, they constitute almost 40% of the global bond market. So therefore, this kind of ESG information related to sovereigns is also critical for capital allocation decisions by investors. So therefore, there is a growing demand for sovereign climate-related risks, but it's currently insufficiently covered. And what we see is often an ex post and lacking clear warming scenarios. They are not reported. And also the information provided is limited with regards to its environmental scope beyond emissions. So there's essentially, you could say, there is really information missing in terms of sustainability information in the public sector. So therefore, the report suggested that the IPSASB, so the International Public Sector Accounting Standards Board, shall lead a consultative process to develop a public sector framework. And as said, this is a 2022 report. And now you see this reaction by the IPSASB, and for a standard setter, they really reacted fast. So you can see it's very small, but you can see that this consultation paper by the IPSASB has been published in May 2022, and you also see the name of that consultation paper. It has also the same name as our workshop as of today. And this consultation was launched knowing that there are already private sector frameworks out there, but also recognizing that these private sector frameworks, they are not tailored to the government's accountability needs. So there are clearly issues missing, or also in terms of terminology that is maybe not suitable for the public sector. So therefore, the report addressed on that shortcoming. And this initiative of the IPSASB was of course driven by the urgent need for transparency and comparability in how governments manage climate, environmental, social, and governance impacts. And also related those kind of aspects to the UN's SDGs, and also relating the issue to the capital markets. So more or less, you could say, really picking up on the issues addressed by the World Bank report. Yeah, and as said, the investor's perspective is quite prominent. And the IPSASB also made its constituents aware that it's for sovereign, but also sub-sovereign entities. So for example, like state governments or regional governments, they also issue bonds, and also from their perspective, it's necessary to know what information needs to be reported in terms of sustainability. Also, you can see public pension funds is also another area which are very much interested in in the particular issue of sustainability. But maybe lastly, also cities like, for example, to mention the city of Toronto, it also issues bonds, and also this city asks itself, how should we report sustainability information? Good. Now let me come to the second topic of this session. And we want to look at what are the existing frameworks and what are existing standards with regards to sustainability reporting. And now I'm citing a report by SIPFA. So that's a UK-based accountancy organization. And their report came up with that quote here. So it's saying there are a multitude of frameworks related to sustainability reporting, each with their own approach to developing and issuing standards or guidance. Yeah, so the report already finds. So we see not just a few, there are actually many frameworks. And also here, let me be clear, that's probably not the full picture, but at least those were the ones that the SIPFA report identified as probably relevant for the public sector. Good, let's start with the UN Sustainable Development Goals, and I have already mentioned them. In the annex to this presentation, you will also find a short kind of description of those 5 frameworks that are kind of highlighted with a tick mark on that slide. So if you are interested in getting more insights of those frameworks, you can take a look at the appendix of that presentation, and you can take a look at there. And as said, UN Sustainability Goals, it started off in 2015. Then another framework is the so-called Carbon Disclosure Project, but it's a less relevant framework, in my view, for the public sector. Then what it is important to note is the so-called Global Reporting Initiative. So the abbreviation for that is GRI. And the GRI, they were established in 1997. And they became the world's most widely used sustainability reporting framework, both private and public sector. So therefore, GRI is quite a strong player in the sustainability arena. Then the Climate Disclosure Standards Board. This is a board more focusing on the private sector. So I would say less relevant to the public sector. Then the next one is the standards that are issued by the International Integrated Reporting Council. So integrated reporting is the idea that entities should not focus just on financial information, but that they should also look at non-financial information in their reporting, and also to relate financial information to non-financial information, and to see how that relates together. So quite a new development then. It's then in the middle, the second bullet. These are the standards of the so-called International Sustainability Standards Board. And the ISSB, that was founded in 2021. And it has a number of headquarters. I think there is one headquarter based in Asia, I think in Shanghai, if I'm not mistaken. Then another headquarters is based in Europe. It's based in Germany, in Frankfurt. And then there is another headquarter based in Canada. Good, and this ISSB I mean, you could say it's kind of a branch of the International Accounting Standards Board. The International Accounting Standards Board, this is standard setter, sets the standard for the private sector. So what you know as of IFRS, these standards are set by the IASB, so the International Accounting Standards Board. And as said, this ISSB, it's part of the International Financial Reporting Foundation, and they are setting standards for sustainability reporting. And at the moment, they have issued 2 standards. So a standard S1 and another standard S2. And you will see later on that the IPSASB is actually building on those international sustainability standards issued by the ISSB. Then mainly relevant for the European context are the so-called European Sustainability Reporting Standards. They are based on the CSRD, so the Corporate Sustainability Reporting Directive. And these are standards that were recently developed within Europe, and they are mainly relevant for companies based in Europe. But the main focus also of the ESRS, it's mainly focused on the private sector rather than the public sector. Of course, you can think of public enterprises, for example, so state-owned enterprises, which are a little bit in the middle between public sector and private sector. And of course, for such companies, also the private sector standards might apply. Then now in the third column, you will see that there are also the standards of the Sustainability Accounting Standards Board, so SASB. And these standards are sector-based. But unfortunately, they did not really cover sovereigns in their standards. So that was really a gap in the SASB standards. So therefore, of course, yes, sector, but public sector was a little bit a gap in their suite of standards. Then another one relevant for the public sector also is the Task Force on Climate-Related Financial. So the TCFD disclosures. So Task Force on Climate-Related Financial Disclosures, TCFD. And that was first developed for the private sector, but also now some public entities are using those standards for sustainability reporting. For example, UK Treasury is making use of the TCFD, but also the City of Toronto is making use of the TCFD. So, and finally, there is also the UN Global Compact, which also provides sustainability reporting framework. So that's mainly the overview, and you see it's quite a wide range of standards, and therefore there is also a need, of course, for harmonization in that area. And on that slide, I really touch quickly upon that. You see here in the private sector, these are mainly the private sector standards. And in the private sector, we also talk about the so-called alphabet soup when it comes to the different sustainability reporting frameworks. Good, but we want to stay mainly in the public sector. And so therefore, let's look at the relevance of sustainability reporting in the public sector. So again, citing the SIPFA study from 2023, the study said we are at an unprecedented moment in time for the future of our planet. The public sector must therefore be bold and take the chance to lead change and actively set the course towards a more sustainable future. So that's really setting a little bit the importance of the topic. And I mean, at the moment, we can see it really day by day, what, for example, climate change affects our environment and our daily lives. And first point that the report highlighted was that the information collected through sustainability reporting is essential in decision making to minimize the negative impacts, but also to promote positive impacts, yeah, so that we see maybe there are some positive impacts that are maybe also related, and what can be done about that. And of course, see what are the negative impacts and how we can handle them. And by that, to create values for economies, society, and the environment. Because that is critical to efficient resource allocation. And also here, again, you see the relevance also to financial markets, because their resources are also allocated financially, but also when it comes to government action, so that government knows where do they need to invest, where do they need to take action. So therefore, sustainability reporting really also supports governments in their decision making. The SIPFA report also highlighted the inadequacy of current public sector sustainability reporting, missing frameworks, and it argued that transparency in that area really also leads to greater stakeholder trust, so mainly by citizens. Then sustainability reporting can bring benefits to an organization in the form of reducing the cost of capital and assisting also in terms of recruitment. And so during my time when I worked in a Big Four company, I really saw that focusing on sustainability can also support recruitment. So I saw that there is a hand raised by Mr. Lito Martin. So do you have a question and want to raise that question here? Sidra, can you maybe give the mic to
I
Mr.
have allowed
Lito?
him. Yeah, and
Yeah.
I'm asking him to unmute.
Yeah. Hello, Mr. Martin. Okay, so I don't think that works. So in the
I've
intro,
allowed him to talk.
yeah. No, but I can't hear anything. Can you hear anything, Sidra?
Not really.
No, me neither. No, so in the interest of time, I think we should continue. Maybe this question can be asked at a later stage again. Good, let me continue. Then a further report was prepared by ACCA, IFAC, that's the International Federation of Accountants, and also INTOSAI, that's the International Organization of Supreme Audit Institution. And those three organizations work together on trying to prepare for sustainability reporting and the related assurance aspects in that context. And the report mainly finds that and saying that public sector sustainability reporting is vital in supporting concerted action by governments to address the world's sustainability aspirations. So first point that the report highlighted was saying that for advancing sustainable development in countries, sustainability reporting is an essential element. And with that, really sustainable development can take place. And it can also allow public sector entities to demonstrate their positive impact on the people and on the planet. So that's one aspect. The second aspect the report addressed was supporting an economy-wide perspective, because it's not just, you know, thinking of private sector and public sector. No, we need to think about the whole economy. And with supporting an economy-wide perspective, public sector sustainability can really offer that more comprehensive understanding of progress towards sustainable development. Then thirdly is also to provide information to capital markets and development partners. By sustainability reporting, it can be enabled that borrowing entities, so sovereign, sub-sovereign entities, they are better able to attract investment, but also donor funding. And therefore, with that information, it's better to align financial flows with sustainability objectives. Fourth point of that report was saying we will have enhanced transparency and accountability. We know what's going on with regards to environmental issues. We know maybe the scale of public spending that is needed to address those issues. We see what is the impact on sustainable development. And it's also for governments to be accountable towards citizens, towards taxpayers, on how their money is used to address sustainability issues. And by that, you know, providing that accountability to citizens, the public sector can promote public trust by that. And the public sector entities, they really can build on their trust and to invest and to make the right efforts in that direction. So I see also a hand raised by Clarice Aureada. Sidra, can you give the mic to that person?
I have allowed her to talk. Can you just unmute?
Hello? Can you speak? We can't hear anything at the moment.
Yeah, not sure because we've tried the functionality already.
That's strange.
I can see the mic is mute actually, and
can you unmute, Sidra?
I am trying because it's just saying ask to unmute. Not really, sorry, Jens.
Maybe we could request one more participant to voluntarily ask to just come on and check that the functionality actually works.
Exactly.
Could somebody volunteer, please, from the participants?
Yes.
Okay, Jeevan, I am giving you the permission to talk.
Hello, good afternoon.
Yeah,
Is
you
it working?
Yes.
Yes, it is.
We can
Nice
hear
to
you.
see you all. Thank you.
Thank you, Jeevan. Just to request everyone, once you raise the hand and I allow you to talk, you just need to unmute your mics.
Yeah. Good. Shall we try another time with the one who raised the hand for that question or for that slide?
Okay, Martin, you
so
already requested to ask the question. I have given you the rights. If you can unmute yourself, if you still want to ask the question. I think Jen's right now, no one wants to ask the question.
No one wants to. Okay. Good. Good. And maybe final point on the relevance of sustainability reporting in the public sector. It's when looking at literature generally. And one of the points that came out was saying, don't see that as a compliance exercise. Really take that as a strategic imperative for the public sector, and also to lead this initiative by example, yeah, and to drive meaningful change in the respective jurisdiction. So it's really to take action on the issues that are really coming up by sustainability reporting. The second point, I think we touched already on that. Attracting investment, donor funding is an important aspect, but also when it comes to internal decision making. So by governments themselves, how to allocate budgets, how to spend the money wisely on the different kind of conflicting things, and ultimately, by providing that transparency that can also have a positively impact on the cost of capital that governments may have. So therefore, sustainability reporting is vital for enhancing transparency and accountability to a wide range of stakeholders, especially including citizens, and by providing reliable information on government actions and progress towards international and national sustainable development goals. And when we touch on this reliable, then we also have this aspect of assurance. And here is where auditors and also supreme audit institutions come into play. And here they have a role to play when it comes to make sure that the information that is reported on sustainability is really reliable. Good, but also that I have to say, this development is rather at the very early stage. Just last year, a sustainability assurance standard came out, mainly focused on the private sector. Good, so this was the relevance of sustainability reporting in the public sector. And what we now try to do is to give you a little bit a status quo of sustainability reporting in the public sector. And I think I have already said that sustainability reporting in the public sector is currently a moving target. So therefore, that can only be a snapshot, and probably tomorrow the world might look already a little bit different. So the first important thing that I would like to note is that this International Public Sector Accounting Standards Board has published an exposure draft for its first public sector sustainability reporting standards. So the abbreviation for that is SRS, yeah, Sustainability Reporting Standard. And given the fact that it is the first one, it's called ED1, yeah, so Exposure Draft 1. And as you can see on the title, so climate-related disclosures, the IPSASB decided, based on the feedback that the IPSASB got on its consultation back in 2022, that the focus of the IPSASB for that first exposure draft will just be on climate-related issues, not on social aspects, not on governance aspects. I think that's an important issue to note, that in this first round, the IPSASB mainly focuses on climate. And you might also ask, okay, what is an exposure draft? What's that? And we will later on hear that the IPSASB is following strict rules with regards to its standard setting process. So part of the IPSASB standard setting process is to have a public consultation on its standards. So everybody in the world has the possibility to raise comments, to share views with regards to that exposure draft. And we will see later on that consultation period that has already been taken place. And at the moment, the IPSASB is in a stage where comments that the IPSASB has received is going to be incorporated into that ED1. The main advantage, or the main advantage for the public sector really is that this standard is specifically designed for the public sector. And the disclosures that it will require, they focus on climate-related risks and opportunities. And what is important to note for you is that the standard builds on the IFRS S1 and S2, but also the TCFD, so the frameworks that we heard early on. And thirdly, with regards to that multi-stakeholder focus that the GRI are having, this multi-stakeholder focus is also considered in the IPSASB SRS ED1. Good, so this is mainly what we currently see in the public sector. So that this exposure draft has been out for comment. The comment period has been done. The IPSASB has received those comments, and the IPSASB is currently working on incorporating those comments into the exposure draft. Then also quite a new report that came out, I think just 1 or 2 months ago. This is a report that was prepared by the Pulsar project of the World Bank and the Korean Institute of Public Finance. They have provided a technical note that looked at sustainability reporting in the public sectors and what is the current status and what are possible next steps. And the report is quite interesting because on the one side, it highlighted that we see a growing need and demand for public sector entities to provide sustainability information, especially as part of their general purpose financial reports. And just to make that point briefly, general purpose financial reports in the public sector, they are wider than just the general purpose financial statements. So this is a wider concept in the public sector, and as said, it goes beyond just financial statements. And the report also finds that while international frameworks are still being developed, some countries, so for example, Brazil, New Zealand, Switzerland, and the UK, they have initiated their own forms of sustainability reporting in response to local demand and other motivating factors, such as, for example, when it comes to risk management or when it comes to improving their reputation. There is a hand raised by someone, say full. Do you want to come in? Sidra, have you seen the hand raised?
Not really. Let me see again.
Okay, because I think the hand was taken back now. Okay.
Yeah, there's no hand raised. Yeah.
Okay, I will continue then. Yeah. And what this report also found was that there is considerable deviations in terms of reporting. So when it comes to structure, maturity, rationale, we see a wide range of approaches by national governments. So therefore, the report underlined that there is a lack of standardization and therefore making comparability of public sector reports very difficult. And what was also found that none of the early movers were actually using the reporting approach outlined by IPSASB's SRS ED1. But I think that is not really something surprising, given the fact that this standard or that exposure draft has only recently been issued. As said, it has been end of 2024 when the exposure draft was issued. So therefore, we have to see it takes time for entities to take on new standards. So for example, let me go back. The report for UK, for example, it was found making use of TCFD. I think Brazil also making use of TCFD. And yeah, so really making use of the sustainability frameworks out there. Good, then another very new report that came out is a report by INTOSAI. As said, that's the International Organization of Supreme Audit Institutions. And of course, they have looked at sustainability reporting more from an audit, more from an assurance side. And they said in the report that without formal regulations and standardized guidelines, there is little impetus for public sector entities to prioritize sustainability reporting. So they kind of clearly indicated this need to have a standardized approach for sustainability reporting in the public sector, because when we don't have standardized information, this leads to inconsistent practices and also fragmented data. Then also this lack of awareness of the concept of sustainability reporting and its importance among public sector employees. So that was another issue. So public sector employees, they are not aware of sustainability reporting. They do not know how this works. And it's often the case that sustainability reporting is only viewed as an administrative burden. The survey that INTOSAI also Supreme Audit Institutions conducted also showed that there are issues around data availability, but also with regards to the reliability of the information, and also when it comes to the formats. They are insufficient, inconsistent, and this hinders in the end to the ability to assess and communicate the performance the public sector has done with regards to sustainability. Then the report also found that there are resource limitations in the public sector to provide that information, but also that there is a lack of the necessary skills among staff. And so therefore, the report highlighted that there is a need for capacity building initiatives. And this is exactly here the workshop which we touch on, so that we try to do a little bit in a way some capacity building. Entities, they also face governance challenges, because when it comes to sustainability reporting, there are multiple stakeholders involved in that, and therefore coordinations among those different stakeholders that can be time consuming, that can be complicated, and that also leads to the delays. Then we see fragmented policies, bureaucratic hurdles, which further impede cohesive and timely sustainability reporting, which in the end results in misaligned objectives and duplicated efforts. And finally, the Supreme Audit Institutions, they see their roles expanding beyond traditional financial auditing, because with sustainability reporting, a lot of the information, it's based on non-financial informations. Also, this aspect of estimates plays a huge role in sustainability reporting, and that is a kind of a new area for those kind of audit institutions, and also they have to learn and take on experiences. Final report that I would like to mention is a report by the OECD, and that report was on advancing public sector sustainability reporting, and also trying to share some insights from past reforms that governments have made in that area. And the report highlighted that there is a significant challenge by member states or by countries in general, because often the workload involved in providing sustainability information, that is oftentimes underestimated. And so therefore also the costs associated with that is problematic. And also when it comes to integrating sustainability reporting into the budget cycle. So when it comes to planning, reporting, auditing, so that cycle where does sustainability reporting has the appropriate place and role to play. Then governments also face informational obstacles like ensuring consistencies, trustworthiness of the data. Data could be manipulated in a way. Then the report found that there are organizational obstacles. So mainly echoing what was also raised in the earlier reports. Maybe also an important point was some cultural obstacles, because on the one side we have let's say the accountancy professions, but on the other hand side we have sorry. But on the other hand side, we also have staff involved more from the environmental, from the sustainability side, then staff involved from government itself. So there's a range of stakeholders involved, and there we see some cultural obstacles, and therefore making leadership in that area not so easy. Good. So by that, we have seen why or what is the current status of sustainability reporting in the public sector. And before the coffee break, I would now provide you with some insights on this standard setter who is in charge for this ED1, so SRS ED1. So historically, the IPSAS board has set standards in the public sector for financial statements. So the sole purpose was on public sector accounting. It was just by this World Bank report and the World Bank approaching the IPSASB and saying, look, you should also move into the area of sustainability reporting, that the IPSASB was moving in that direction. So therefore, the IPSASB has already a track record, I think, of over 25 years of experience in setting standards for public sector accounting. So therefore, the World Bank really recognized that the IPSASB has the credibility, the knowledge, and the capacity to take on board such a project. So when we look at how the IPSASB describes itself, so the IPSASB is an independent standard setting body, so it's international, so that there are people represented from all over the world, and the IPSASB also tries to ensure that all the different regions in the world that they are sufficiently represented at the board. So the IPSASB is part of the International Federation of Accountants. So you might know that the International Federation of Accountants, they are also in charge for setting the standards when it comes to auditing financial statements. And of course, now this board in charge for standards for auditing, they also took on board the issue of sustainability and came up with a first standard. So a full standard on sustainability auditing. And maybe final point, the IPSASB is overseen by a public interest committee to ensure really that the public interest is represented when setting those standards. And since its establishment in 2004, the IPSASB has developed the International Public Sector Accounting Standards. So the abbreviation for that is IPSAS. And of course, some of you might be well aware that in the public sector, we still see there are public sector entities reporting on the accrual basis, but then there are also still public sector entities which are reporting on the cash basis. And of course, the cash basis of accounting, that's the traditional approach of public sector accounting, and accrual accounting, that is the approach yeah, let's say for the 20 to last 30 years has gained of significant importance. And it is also foreseen that in the future that the accrual basis will still see a growing number of countries to adopt those accrual basis IPSAS. Then what is the mission of the IPSASB? And the core mission of the IPSASB is to strengthen public financial management. So good public financial management is one of the goals that the IPSASB has, but then taking on board the sustainability aspects, the IPSASB is now also committed to sustainable development. So making sure that this is achieved on a worldwide basis. Good, and based on that mission, the IPSASB, as said in the beginning, for the first 20 years, you could say, mainly focused on financial reporting standards for the public sector, but now, until recently, the IPSASB is developing sustainability reporting standards. And of course, the IPSASB also promotes the adoption and the implementation of those standards. So for example, when it comes to implementation of accrual basis IPSAS, the IPSASB provides training material in that regard. So now the question is, who shall apply the IPSASB standards? So what is actually the IPSASB's conceptual framework saying? So which are the entities that should apply IPSASs? So just to make that clear, yeah. So the standard is saying, or the conceptual framework is saying, the standards of the IPSASB, they are designed for use by public sector entities, including national, regional, and local governments, and also related governmental agencies, which have the following three distinctive features. The first feature is those entities, they need to be responsible for the delivery of services to benefit the public and or to redistribute income and wealth. Second criteria is that they mainly finance the activity directly or indirectly by means of taxes and or transfers from other levels of government, social contributions, debt or fees. And so that shows you that all three criteria needs to be fulfilled so that this is going to be a reporting entities. So the final characteristic is that entities do not have the primary objective to make profits. So for example, when you think of state-owned enterprises, typically state-owned enterprises, they finance themselves by revenue. and typically their aim is to make profit. Yeah? So therefore, state-owned enterprises would typically not fall under that definition, and they would be out of the scope of the reporting of such kind of information. Good. So what I would highlight is that the IPSASB operates under an open, consultative standard setting process, because they issue an exposure draft before they are going to set a final standards. So what they will do is they conduct consultation, and a second aspect to make sure that all relevant perspectives are taken into account is that the board itself, it also has observers. Those observers, so for example, World Bank, Asian Development Bank, and so on, they have seats at the IPSASB, and they are observing the meetings, and at least they have the possibility to raise their voice at those meetings. So also from that, it's made sure that input goes into the standard setting process of the IPSASB. So IPSASB standards, they are generally aligned with IFRS. So IFRS, that stands for International Financial Reporting Standards. These are the private sector standards, mainly used by large corporations, and they are using that for their financial reporting purposes. And as said, the IPSASB, when they are setting standards, and the approach is like this: when there is an IFRS that more or less covers the same issues that for both private and the public sector, then the IPSASB is taking the approach saying, look, we will use as a starting basis the respective IFRS, and only when there is public sector requirements, we then deviate and provide own public sector specific guidance. So therefore, when the issue, as said, is primarily the same in the public sector and in the private sector, the starting basis for standard setting of the IPSASB is the respective IFRS standard. So for example, think of accounting for property, plant and equipment. That's more or less, you could say, similar in the public and the private sector. Therefore, the IPSASB has used IAS 16, that's the private sector standard, for its own standard. But then, for example, it came out there are infrastructure assets, there are heritage assets, which are unique to the public sector. And in that regard, the IPSASB has provided own guidance for the public sector when it comes to infrastructure assets and heritage assets. Good, and as said, there is a structured process for reviewing and adapting ISB documents when the IPSASB is developing its own standards. But of course, there are public sector specific issues. For example, when you think of taxes, for example, when you think of how to report the budget into the IPSAS financial statements. I mean, in that cases, it's clear that there is no really equivalent IFRS standards. And so therefore, when we have really public sector specific issues, the IPSASB develops an own standard for the public sector. Yeah? So these are important concepts that you need to understand now when we come later on, when we go into the depth of the IPSASB SRS ED1. Good, and I think I already mentioned that the IPSASB has already 25 plus years of public sector accounting standard setting expertise, and therefore they can really build on that expertise when developing the sustainability reporting standards. Good, and just to maybe highlight one of the countries that are using IPSAS as a basis for their public sector accounting. And here you see the financial statements of the government of New Zealand. And I included the latest ones, so the ones from 30th June 2024. And these financial statements, they have been prepared in accordance with public sector PBE accounting standards tier 1. So these are the standards that New Zealand has adopted based on the respective IPSASs. Good, and now when it comes to how the IPSASB has set up itself when it comes to setting standards for sustainability reporting in the public sector. And there you can see the IPSASB has built 3 different groups or forums. So the first one is the so-called Sustainability Reference Group, and you see major international organizations like OECD, World Bank, IMF, INTOSAI, the CDP, Forum of Firms, the Accountability for Sustainability is included in that. The UN is included in that. So there are really a number of different stakeholders represented in that group. Then there is also, especially for this issue of climate, there is a climate topic working group. There the chair of the IPSASB is represented, plus 1 member of the IPSASB. Then there is members from the International Sustainability Standards Board, so the private sector standard setter, but also the GRI. So the Global Reporting Initiative has also a member within that climate topic working group. So really to making sure that the standard on climate disclosures is sound from an international perspective. And finally, some national standard setters are represented. For example, the Canadian Sustainability Standards Board is represented, UK Treasury, but also the New Zealand standard setter is represented in that working group, because given the fact that they are really front runners in that area. And finally, there is a Sustainability Implementation Forum, which is an open forum to engage especially with jurisdictions in the world that are early adopters and that they want to share experiences on adopting this SRS ED1. Good. With regards to the standard setting process, I keep that very brief. As said, the IPSASB has a very structured process in place, so it's really a regulated process. It all starts off that the IPSASB consults on its agenda, on its work plan, so that it gets feedback from its constituents and to make sure that all relevant and necessary considerations with regards to new standards are considered. Then, if it's clear, when it's clear what the necessary projects will be need to be followed, then the IPSASB is conducting research. It's then occasionally doing a consultation paper. So really trying to get feedback on that project. And when it came out from the consultation that the IPSASB shall follow and continue with that project, then the IPSASB really develops the exposure draft, and this exposure draft is then put out for comment, and they typically make this public on their website. And everybody in the world is invited to provide comments and share insights for that. With regards to the consultation on the IPSASB's SRS ED1, so I think almost 100 different institutions around the world shared comments with regards to that exposure draft, and I think that was really one of the highest number of feedback that the IPSASB has received on that consultation. And that then comments came in, and all the comments that the IPSASB receives, they are put on the website of the IPSASB, and everybody in the world actually can see what the comments were that the IPSASB has received. And then actually the work of the IPSASB then continues. They take on board the comments, they revise the standard accordingly, and then here on that kind of fifth stage, then a final approval is taking place, and then the standard is going to be issued. And a newer development is that the IPSASB, when they are setting standards, there is a so-called consultative advisory group. They are providing input on the process of standard setting that is more from a technical side. And as already said, there is also this public interest group, and that public interest committee, they are providing oversight over the standard setting process. Good, so that's mainly it for the process. And as said, it's a very strict process, and the IPSASB calls it the due process. And there are 4 principles. So it's an open and transparent process, making sure that it is an inclusive approach. So stakeholders from different areas of the world are, or all stakeholders in the world are considered, that there is a public interest oversight by the Public Interest Committee of the IPSASB, but that there is also enhanced transparency and accountability. Good, and with that, we are through with that first session. And I was told that there are 2 interesting questions in the frequently asked questions. But unfortunately, I can't see the frequently asked questions. I would suggest the following. I suggest now that we make a break for maybe 15 minutes, so 5 past half, so that we come back at 2:35, and that at that stage I will pick those 2 questions that came through the chat. Okay, so we will pause here, and we will meet again in 15 minutes. Thank you. So, welcome back. As promised, we will now touch first, before we continue, in going deeper into the IPSASB SRS ED1. We will take a look at some of the questions that were raised in the Q&A section. So first of all, many thanks for the valuable comments. Really appreciate. And the first one was, how can different governments produce comparable sustainability reporting given diverse socio-economic conditions, legal system, and environmental priorities? So obviously this comment makes the point that it is difficult setting sustainability reporting standards on a global basis. And but looking a little bit also to my experience, because I have also worked for some time at this International Public Sector Accounting Standards Board, and what I have experienced is really that this is challenging. Yeah, so to really consider all the different conditions, legal systems, and so on when setting international standards. So oftentimes you can only cover that by trying to set principles rather than really detailed guidance. So therefore, one of the approach that an international standard setter is taking on board is setting principles rather than really detailed requirements. And I mean, if you look at a little bit in history, when it comes to financial reporting, so we have the IFRS, which are applied by, I think, by more than 150 countries all over the world. Then the IPSASs are applied by really a lot of countries all over the world. So that shows that somehow it's possible, but on the other hand side, I can also tell you that it's challenging from a practical perspective. And therefore, also when you look at a little bit of the approach of the IPSASB, the standards of the IPSASB, they are not mandatory. Yeah? So, they set standards, but in the end, it's on the different jurisdictions to adopt those standards. And what is happening oftentimes in this adoption process, that the standards are adapted to the local needs. So this is also a mechanism on how those different socio-economic conditions, legal systems, and so on, how can these be considered? Good. That was an anonymous participant, so I hope I could address that question. If not, please come in. Yeah. Then second question was around saying, since sustainability reporting is both a duty and a requirement for government agencies and may appear more as an expense than a direct contribution to national income. So against this background, how can the government effectively report the gains and benefits of sustainability initiatives, particularly environmental and social outcomes, and what specific disclosures should be highlighted to demonstrate their value to citizens? And in that regard, I would highlight that the IPSASB follows this TCFD framework. And within that TCFD framework, so we will come at a later stage to that framework, we differ between governance, strategy, risk management, and metrics and targets. So therefore, in the strategy sections, so governments are required to report on their strategy. So how does the government intend to address those climate issues? So that's, I think, one area on how such measures taken by governments could be addressed. And maybe the second aspect that refers to the targets and metrics. Because a little bit the approach of the IPSASB SRS ED1 is that the idea is that the government sets targets. These are targets maybe also set by international institutions. So for example, to have a 1.5 degree Celsius in terms of climate. And so to work on those goals and to publish those targets, and then to report later on how those targets are maybe achieved. So there is a way of showing to the citizens how those different environmental goals can be achieved. What is not envisaged with SRS ED1 is the social outcomes. As said, the focus at this moment is mainly on climate. So social aspects, they could be addressed at a later stage, but not at the moment. Good, so that was to that question. And that was also an anonymous question. Then Daniel Augustin made the point and asked whether there is an evaluation part of the process. And I think that question referred to the IPSASB's process of setting standards. And he also asked, please explain how to determine if the objectives of the processes were attained or not, and whether there are any criteria for evaluation. And with regards to that question, it can be said that the IPSASB has recently introduced a so-called post-implementation review of its standards. So, for example, they are saying after maybe 5 years, maybe after 8 years, the standard setter will look on how this new standard is taken up in practice. Sorry. What were the experiences of governments of applying that standards? And based on the feedback that the IPSASB gets on those standards, then of course, depending on the feedback, then these standards will be improved. And of course, as already said, the IPSASB tries to come up with best practice internationally. But of course, the standards set by the IPSASB often will be adapted to national contexts. And that is also something that needs to be factored in when this is when these kind of standards are evaluated. And in terms of criteria, I think from a preparer's point of view, I think feasibility of the requirements, that is certainly one aspect. But maybe also other aspects like understandability of a standard, that could also be relevant points. So Daniel, I hope I could clarify that question in that regard. And then we have one final question by Charika Chanuntapipat. So the question is, the ISSB standards set the focus primary users. How will this be different for public sector disclosures? as the purposes and main audiences might not be identical to those of corporate disclosures. That's very relevant. And maybe just to outline a little bit the IPSASB's concept of standard setting. The IPSAS board has a conceptual framework. So similar like the ISSB, they have their own conceptual framework, and the IPSASB has its own conceptual framework. And that conceptual framework that actually considers general purpose financial reporting. So it already takes a wider perspective. So it means, for example, the conceptual framework of the IPSASB not only focuses on financial information, but it also focuses on non-financial information. So that is one aspect on how the IPSASB considers that sustainability disclosures aspect. And also within that conceptual framework, what we do have in there is a specific sections about the uses of general purpose financial reports. And within that conceptual framework, the uses are in the public sector, really specifically addressed for the public sectors. And what we are seeing there, they are saying it's mainly resource providers and their representatives. So you could say one of the main user groups is the taxpayers and their representatives. These are the politicians. So this is actually how the IPSASB approaches the users' perspectives. And as said, in terms of how the IPSASB sets its standards, is really following this strict process on how to start off with the ISSB standards. So now in case of sustainability reporting, they started off with the IFRS S1 and S2. And based on that, they build where are maybe public sector specifics. And so, for example, one of the major issues also in the private sector, by the way, has been the issue of reporting on greenhouse gas emissions and, for example, scope 3. And so therefore, also in the private sector, we still see that entities, they really have challenges in reporting their scope 3 emissions. And so one of the approaches that the IPSASB has taken on is to consider what would be appropriate relief for entities to kind of grow into such kind of requirements, so that they have a certain period of time that they are then able to implement those requirements. Good. I hope this answer is helpful to your question. And I saw you have another one. And you asked in terms of the entity scope when providing sustainability disclosures, should this be a national, ministerial, or should that be at national, ministerial, or departmental level? To be honest, this question refers to the scope of reporting. And given the fact that this is a little bit more complicated, I would move that a little bit to later, actually to tomorrow, when we are discussing the scope of reporting and also the reporting entity. So let's keep that question for a later stage. Good. Okay. Without further ado, I will now continue with the presentation and go straight into the IPSASB SRS ED1. And what were the starting points? And just maybe a little bit to repeat on what we have already heard. So it was all the developments around the world that we see with the negative impacts of climate change, and what can be government's role and government's measures to really take on those negative impacts. Then, as already mentioned, the 2022 World Bank report called on the IPSASB to develop a framework for public sector sustainability reporting. So there was a clear ask to the IPSASB, and the World Bank is a long-standing observer of the IPSASB. So they really got heard by the standard setter. And in end of 2022, beginning of 2023, the IPSASB launched this global public consultation, and the outcome of that early consultation, so that was before the IPSASB started the development of SRS ED1, that proposal of the IPSASB to take the lead on developing public sector specific sustainability reporting really received strong support by constituents. And then, based on the outcomes of the consultation, the IPSASB began focusing on developing a first standard, a sustainability reporting standard, focusing on climate-related disclosures. As said, the governance aspect from the ESG and the social aspects are at the moment not covered by that. So that's important that you are aware of what the focus of the ED is on. So then in October 2024, the IPSASB issued the exposure draft for public consultation, and this consultation then ended in February 2025. And the standard is envisaged to be approved finally approved in the December 2025 meeting of the IPSASB. So the IPSASB, they're having normally quarterly meetings, sometimes also even in between meetings. So they will have in September now the next meeting, and as said, with the aim of approving the standards finally in the December meeting. And now what came out of, so one of the main outcomes of the public consultation on the exposure draft was this issue of separating the standard between own operations and public policy programs. So own operations, you could say, so this is really the operations that a public sector entity has. So the daily activities that a public sector entity performs, these are own operations. But then the IPSASB in exposure draft, it also envisages to have or to focus on public policy programs. So these are programs focusing on climate-related aspects which the government has. So that could also be, for example, a program of the government which promotes the installation of solar panels by private but also public sector entities. So that could be a public policy program. But as said, one of the major decisions coming out of the June 2025 meeting was that the constituents actually said it is too complex to have own operations and public policy programs within one standard. So therefore, based on the feedback that the IPSASB received, the IPSASB decided to have a separate standard on own operation. So that standard on own operation that clearly, is kind of an equivalent to IFRS S2, because it also has the focus on own operations. And the IPSASB decided to have a phase 2, which focuses solely then on public policy programs. But only in this December, the IPSASB is going to discuss on how they are moving forward with the standard on public policy programs. So probably in the second half, so H2 2026, that means second half of 2026, the IPSASB envisages to approve a final pronouncement on public policy programs related to climate. So this is the current project status. As said, for own operation, the envisaged goal is to approve the final standard by the end of December. So by the December meeting of the IPSASB, followed then on by an implementation phase that will start in 2026. Good, so that's the first important thing you need to know on the status of that project. Then secondly, what is the approach of the SRS ED1? So SRS ED1 proposes requirements for public sector entities to disclose, so to disclose information. That means from an IPSAS perspective, that this is not part of the financial statement. So that information is not part of your balance sheet. It is not part of your statement of financial performance. It's not part of your cash flow statements. It can be part of your notes, but it can be also located elsewhere in your reporting framework. So this is all the time when the IPSASB talks about disclose. Therefore, as said, in the information is provided in an entity's general purpose financial reports. So it does not have to be necessarily the general purpose financial statements. And the focus is on climate-related risks and opportunities of that government entities. And the focus is on this government entity's own operations. And as said, the ED originally focused also on climate-related public policy programs and their outcomes. So public policy programs didn't talk about risks and opportunities. It talked about outcomes. Good. And now you will see on that right-hand side, this is the so-called TCFD structure. So the task force on climate disclosures has taken up that framework. And the TCFD structure is, so first of all, you look at the governance of an entity with regards to climate. Then you look at what is the strategy of that entity with regard to climate. And actually strategy, that would be the part where an entity could also talk about what a government is doing or intending to do with regards to climate measures. And then the third layer is then on risk management. So here more looking what are the risks, the possible risks that an entity faces, what are maybe also possible opportunities that entities may face, and how can those risks be managed. And then the final, the most narrow scope is then the metrics and the targets. So in that sections of the disclosures, entities will look at or have to report on certain metrics, but also outline what are their targets related to those metrics. So that's in general the framework that the TCFD is using, that IFRS S2 is using, and now that IPSASB SRS ED1 is also using for its framework. Yeah? Good, and now this graph here. So the table tells you more what the different disclosure pillars actually tell you. So governance sets the tone, and that clarifies who is responsible for taking on climate action. Then secondly, the strategy that reflects the plan of the reporting entity to address those climate risks. And the question is, so how are the climate issues integrated into those objectives? Then thirdly, the risk management, that really operationalizes the plan outlined in the strategies. So it is also asked, how are threats and opportunities handled? So the how perspective is looked at. And fourthly, then the focus is on metrics and targets, measuring the performance, so that you are able to measure, for example, your greenhouse gas emissions, scope 1, scope 2, scope 3, and really keeping track whether the reporting entity is making progress with regards to that. Yeah? And this approach, and then I will kind of stop outlining the approach of the standard. So on the left-hand side, you see the entity's own operations, so which address the climate-related risks and opportunities, and the right-hand side, the climate-related public policy programs, which focuses on the outcomes of climate-related public policy programs. And now you see that there is a little bit a kind of an overlap between those two different perspectives. So for example, think of this entity, this public sector entity is installing solar panels on its office building. So therefore, that would, on the one hand side, fall under the entity's own operations. But if it is the case that the government itself also has a program in place which is promoting the installation of solar panels on buildings in general, then this measure of the entities of installing solar panels on the one hand contributes of the entity's own operation, but it also contributes to the climate-related public policy programs. And therefore, there is this overlap between those two areas. So there is, measures on the one area can impact the other area and vice versa. And this complexity, that was the reason then for the IPSASB to say, look, we divide that really in the middle, and we just focus in a first phase of our project on entities' own operations. And in a second phase, we look at climate-related public policy programs. Yeah? Good. So now, as said, I want to tell you now a little bit about how the standard is structured so that you get a better understanding in the end on how the IPSASB envisages also to have those disclosures in the report. And maybe there are some of you already familiar with IPSASB standards. So typically the first heading of the structure is on the objectives of the standard. So the objectives tells you, what the IPSASB intends to do with regards to climate-related disclosures. Then the second important part, that is the scope of reporting. So here the question is, which are the entities that shall apply that standard? So, and one of the questions could, for example, be, does only the entities that are applying the accrual basis of accounting, so the accrual basis IPSASs, should only those entities be required to apply IPSASB, SRS, ED1? Or should, could there also be the cash basis entities applying that standard? So these kind of questions are clarified within the scope. Then there is always in a standard a definition section. In that definition section, the standard setter defines the relevant terminology of the standard. So for example, it clarifies what are own operations, what is a climate-related public policy program, what are greenhouse gas emissions. So all those partly really difficult terminology is defined within the third section of the standard. Good, and now after that more general part of the standard, you will see the structure. So the fourth heading is the governance, the fifth is strategy, the sixth risk and outcome, and the seventh metrics and target. So here you see that really follows the approach taken by TCFD, starting by governance, then outlining strategy, then touching on risk and outcome management, and then metrics and targets. And also by that outline, you see that this will be a mix of qualitative and quantitative information. So for example, when it comes to governance, I mean, most of the information that is narrative information. But when we look at metrics and targets, that will be quantitative information in nature. So therefore, what we will see, we will have a mix of quantitative and qualitative information in sustainability reporting. Good, and originally you will see that the IPSASB has differed in the metrics and target section between climate-related metrics for an entity's own operation, then climate-related targets for an entity's own operation, and then referring back to public policy program, metrics and targets related to that public policy program. So that was the approach that the IPSASB has taken. Good, and now let me come to another crucial topic within sustainability reporting. And that is the approach of materiality. And materiality, I mean, those of you who are engaged in financial reporting, you all know that this is one of the most important concepts in financial reporting, that maybe it's not every single dollar, not every single euro that we have account for. When it comes to financial reporting in the financial statements, of course, I agree, and I also I'm a big fan of accounting for each single dollar, but essentially for financial reporting, in preparation of financial statements, we do have some leeway. Yeah, let's put it like this, and this comes through materiality. Yeah, and in financial reporting, it is said. So when you look at the left half of this table, so information in the financial statements is considered material whenever its omission or misrepresentation could influence the decision made by users based on the financial statements. Now we have a similar concept in sustainability reporting, but as already said, the main difference in sustainability reporting is we are not only talking about financial information there, we are also talking about non-financial information. Yeah? So therefore, the concept of materiality does look a little bit different than in financial reporting. And generally, when we read this, then you see sustainability reporting should generally address the topics that reveal the significant economic, environmental, and social impacts of the reporting company or organization, or significantly influence the assessment and decisions of stakeholders. Yeah. So also when it comes to let's say the addressees of the reporting, in financial reporting we are talking about users, and in sustainability reporting we are talking about stakeholders. That also addresses that aspect. Yeah. And now let's see how the IPSASB is addressing the issue of materiality in IPSASB SRS ED1. And as said, that has been one of the controversial issues that came out of the consultation of the ED1. And let me first just show you what the IPSASB has came up with. So the IPSASB said an entity shall disclose material information about an entity's climate-related risks and opportunities, and where applicable, climate-related public policy programs. Yeah, so we do apply materiality on an entity's climate-related risks and opportunities, and to climate-related public policy program outcomes. Yeah, so entities would have to see where they have climate-related risks and opportunities, and where those risks and opportunities are material. And now, in terms of the definition, so in the context of climate-related disclosures, information is material if omitting, misstating, or obscuring, it could reasonably be expected to influence the discharge of accountability by the entity or the decisions that primary users make on the basis of the entity's general purpose financial reports prepared for that reporting period. So this definition here mainly follows what the IPSASB has in its conceptual framework. And as already said, the IPSASB's conceptual framework has a wider concept than the private sector. IPSASB's conceptual framework not only looks at investors, it mainly looks at resource providers, which are taxpayers, which are citizens, and which are representatives of them, like politicians. So therefore, we do have a really wider scope than in the private sector. And what also needs to be mentioned is that the conceptual framework of the IPSASB already addressed non-financial information. So therefore, this definition here also had in mind that also non-financial information need to be reported in sustainability reports. So the IPSASB has received a lot of comments with regards to that. And one of the things I would like to highlight is the IPSAS board is using a single materiality approach. Single materiality means the focus of the IPSASB is mainly a financial perspective, because the IPSASB is saying, look, we are focusing on the long-term fiscal sustainability of a reporting entity. So therefore, we don't follow a double materiality approach. For example, in Europe or also in GRI, they promote a double materiality perspective, where an entity should not only look what are the impacts that that climate or that the environment has on an entity, but it also says with double materiality there is an impact materiality, and that is the perspective that the entity so the impact that an entity has on its environment. And that was one of the issues that was that was addressed by constituents to the consultation and has raised some discussions. But the IPSASB has really, how can I say, considered all the different approaches to materiality and finally concluded in its exposure draft that following a single materiality approach and using its conceptual framework materiality approach is suitable for the public sector. Good. Yeah, the focus of single materiality is climate-related risk and opportunity, and climate-related risk, they refer to the potential negative effects of climate change, and climate-related opportunities, they refer to potential positive effect of climate change on an entity. And at this stage, I would like to hand over to my colleague, Olga, to run the poll now on this question number 1 with regards to materiality.
Thank you, Jens. So now, colleagues, you will see a poll, and please do let me know if you're not seeing the correct slides. You should be able to see now a slide with a QR code and a website address. You can either scan the QR code, which will give you access to the menti.com website, or you can go straight to the website and enter the code that you see on your screens. Okay, fantastic. I can see that things are working. Thank you very much. Great. Let's move to the poll question. So we would like you to share your opinion about the proposed materiality approach that is used by IPSASB. And on the website or on your phone, depending what device you're using, please type in your thoughts. As they come to you in free form, let us know what you think about IPSASB materiality. Great, we have the first thoughts coming in. You can do a couple of words, few short phrases. You can give us a longer answer. It's great to see that many agree that it's a good approach to using a single materiality concept, although judgmental. So there'll be some professional skepticism and judgment to be used when making decisions about what is material. Brilliant. Keep your answers coming in. We'll give a few more minutes so that everyone has a chance to share their thoughts. That's great. Thank you. Thank you. Keep your answers coming in. We have a little bit under 50% response rate, so it'd be great to have a little more thoughts from you. It's good to see that there's a feeling it's reasonable and straightforward, although we have the opposite of that as judgmental as well. Brilliant. And aligned with conceptual framework of IPSASB, definition is still broad. So there is a little bit of uncertainty that we see in the materiality definitions.
Yeah, and I I also saw a question coming in asking for phase 1 single materiality may be applicable, but for phase 2, will double impact materiality be also considered? To be honest, we don't know yet. At the moment, the focus of the IPSASB is on own operation and single materiality. So I think it remains to be seen. So if you are interested, all the IPSASB meetings are broadcasted live. So in the December meeting, that could maybe be an issue that is discussed there. But at the moment, we can't really say whether that is going in that direction. Good. Olga, shall we?
Okay. Yes.
In the interest of time, shall we continue?
Let's proceed. I
Thanks.
think we have, yes, about 50% of responses. I think that's a good start. And yes, let's move on. Jens, would you like to address the questions now in the Q&A or leave them until the end of the session?
No. Now, I will address them now, because if we wait until the end, we might probably get lost. So therefore, I will address them now. So Sasha Andani raised the question, what if there are a non-climate related programs or policy that may have unintended consequences on climate outcomes, such as increasing greenhouse gas emissions or reducing resilience to climate change? Should the public sector recognize this too? So as said, given the fact that this issue of climate-related policy programs have raised really complexities in the now in the consultation and also in the discussions by the IPSASB. So therefore, I think at this stage we cannot really say how this needs to be reported on. So we should need to wait for the IPSASB. Maybe they will come out again with an exposure draft then on their phase 2. So I suggest that we kind of defer that question a little bit when it is more clear on how the climate-related policy program bit will look like. Good. Then second question, Daniel Augustin, on please advise link to quantitative and qualitative metrics report form. Let me first say the following. At the moment, we see the first reports on IFRS S2. So these also the private sector entities, it's the very first year that they are reporting on that kind of information. So there is still that is still a work in progress. So to already talk about metrics report form, I would be a little bit cautious to say that. But I can tell a little bit about one of the principles that the IPSASB, but also the ISSB has come up with. That is the principle of connected information. And that principle somehow says that preparers should make sure that the information within the climate-related disclosures are connected. So, for example, that we see, for example, when an entity reports on climate-related risks and disclosures, and then measures taken for that, and then what the effect is on the financial side of things. So that we then have a a relationship between qualitative information, maybe quantitative information. Okay, what are maybe the resources needed to accomplish a certain program, and that in the end, what are the metrics and targets that are reported finally on that. So that this is kind of a coherent circle of reporting, so that users can really see the progress on where they are. But Daniel, please forgive me that at this stage, given the fact no public sector entity has yet applied IPSAS SRS ED1, so therefore maybe there should be another webcast, maybe in a year's time or so, where this can be shown on how the reporting actually looks like in practice. Good, and then Rochelle Jane Capilli raised the question: what mechanisms are being considered to ensure the credibility of public sector sustainability reports, particularly in developing countries where independent assurance practices are still evolving? Yeah, that is a good question, and of course, I mean, my primary look would be to the supreme audit institutions, so that they take on board also from their perspective sustainability reporting and providing assurance around that. And at least when I'm looking a little bit on the activities of Intosai, at least that is on how this is developed. Of course, I mean, you're raising the issue of developing countries, and of course, funding is a critical need. So to say, look, maybe entities could engage with a private or other public sector auditor and to hire them for sustainability reporting, but that could be without a doubt also a cost perspective that needs to be factored in. Good, and final question now here from Eleazar Barrow. So how can the Supreme Audit Institution provide assurance on sustainability reports when data may be forward-looking, qualitative, or outside traditional audit scope? In that regard, the the International Standards Board on Auditing, so the ISSB, the International Auditing and Accounting Standards Board, they have come up with a standard that is addressing exactly that issue that we are facing: forward-looking, more estimation, more qualitative information, and information which is outside the traditional financial information. And it's a standard called ISSA 5000. And this standard is addressing actually those aspects. And I mean, we can't cover that standard now in this session, but I suggest to refer to that. And I also know for the public sector, the Supreme Audit Institution, they often work on a, let's say, public sector version of the international standards on auditing. So, but I don't know whether the Intosai is working already on such a public sector specific standard on auditing sustainability information. Sidra, I see your hand raised.
Yeah, Jens, there is another question in the chat as well. I don't want you to miss that.
Yeah. Okay, thank you. There is a question in this chat. Wait, where is my chat? Yeah,
Yeah,
okay. Yeah, So the question, how can public sector entities practically determine which sustainability impacts are truly material without overwhelming reports with information that is important to some stakeholders but not decision useful for accountability. So one of the instruments on identifying which of the topics are materials to report in is a materiality and analysis. So the materiality analysis, that is a kind of a structured assessment on how you can identify such material topics, and I suggest that this is the way you should take on. Yeah? So, but in the interest, it's now answering your question. Okay, thanks, Sidra. In the interest of time, I suggest that we move on now with the presentation so that we make it right in time. So this was on the materiality, and now a little bit on the design of the standard. As said, the standard is primarily IPSASB SRS ED1 is primarily taken from IFRS S2 climate-related disclosures that was issued in 2023. Then the ISSB also issued IFRS S1, which contains general requirements for disclosures of sustainability report related financial information. And what the IPSASB did, it incorporated that IFRS S1 into its framework, yeah, so into its SRS ED1, so that aspects are also covered. Good, and also some general requirements. So for example, materiality, as we have just heard, those general requirements from IPSASB's conceptual framework are incorporated in its ED1. Then the standard from the Global Reporting Initiative, the standard number 3 on material topics, when it came to that multi-stakeholder stakeholder approach, that was also considered when developing the standards. And the final point was the question around how to report on greenhouse gas emissions. And the ISSB suggested the use of the greenhouse gas protocol, which is a corporate accounting and reporting standard. And the IPSASB also at least assumes that governments can make use of this protocol and report based on that guideline. Good, and I think, Olga, now we do have another poll question, which relates on the question, how suitable do you think is IFRS S1 and S2 for the public sector?
Yes, thank you very much, Jens. And hopefully you can see the screen. Once again, you have the instructions of how to access the poll. Okay, thank you for letting me know that it's working. Wonderful. So let's move to the question itself. So we'd like to know your view on whether IPSASB approach to base its standard on ISSB IFRS S1 and S2 is appropriate. Do you agree with it? Do you not agree with it? Do you think it's relevant? Too complicated? Too simplistic? So let us know what you think by moving the toggles on your screen for each of the statements that you see. Okay, so we're seeing the first responses coming in, and IFRS S1 S2 is seemingly most suitable, although there are different opinions about its simplicity, complicating complicated aspects and also relevance. GRI is very close behind. If you'd like to support your answer with comments, please do post them in the chat, or if there's questions in the Q&A, just to give us more context. Let's give it a few more minutes just to get as many responses as possible. I think we have a general agreement that the IFRS S1 S2 is a suitable framework. It's interesting to see that there are a few responses saying that it's too simplistic for public sector. Please do share your thoughts in the chat about this. Okay, so we have around 50% response rate. Jens, shall we proceed?
Yes, please. Yeah, in the interest of time, I think we should proceed. Okay. Good. Now we look at the effective date and also the first ideas around transitional provisions. So effective date, that always means at what point in time does the standard, from what point in time onwards, does the standard need to be applied? And of course, there is some urgency around climate-related disclosures around the world. So the IPSASB needs to balance, on the one hand side, the urgency, but on the other hand side, that entities need to have appropriate time to collect the data, prepare the reports, and so on. So at this stage of the project, no effective date is foreseen. And typically it's like that in the meeting where the standard is going to be approved, the IPSASB decides on the effective date of the standard. So that means in the December meeting this year, we will know what will be the effective date of the standard. And of course, earlier application is always permitted. So if the standard is out, entities can use it and apply it straight away. Good. And the entities, so when an entity says they will apply the standards, they should apply the standards from the date of the adoption. That means beginning of the annual reporting periods in which an entity first applies the standards. Good. And in general, and that's the usual approach in IPSAS, that when an entity says that's using the standards, then an entity needs to apply the entirety of the standards aside from the specific transitional relief that is provided. And just a quick look at what is the transitional provisions envisaged at this stage of the exposure draft. So no comparative information in the first year is envisaged. Therefore, the entity is not required to disclose comparative information in the first annual reporting period. And also, there is some relief in the first year of adoption First is climate-related disclosures can be reported up to 9 months after the end of the annual reporting period. So it's not 6 months, so it's 9 months that entities have time to issue their reports. And even if this is after the related financial statements are published. Yeah? So entities could publish their financial statements, let's say end of June, and end of September, they provide their climate-related disclosures. And also an important relief is this reporting around Scope 3 greenhouse gas emissions. So it is envisaged that entities are not required to disclose Scope 3 emissions for the first 3 annual reporting periods, given the fact that this is quite cumbersome and difficult to come up with Scope 3 emissions. Good. Olga, over to you on the questions with regards to the time frame of adoption.
Thank you. One more poll we have from our participants. Just a quick reminder again, I'm sure that everybody has the apps open. So let's move to the question again, being mindful of time. So the third question is, within which timeframes do you think your country will be ready to adopt IPSASB SRS or another framework? So please let us know what your thinking is with respect to adoption timeframes. Okay, so we have 5+ years after issue. So we're looking at 2031 approximately for the majority of jurisdictions.
Yeah. Just to comment on that, Olga, that really reflects my observations that it's especially when it comes to, let's say, higher levels of government. For example, when a national government needs to report on climate disclosures, this is a really a complex task. And let's say it's different than for a local government, which is much smaller and where things are a little bit less complex and easier to handle. So it also depends on the entities that we are looking at.
Absolutely. Okay, I think we have quite a good percentage of responses.
Yeah.
And
So
shall we move forward?
Let's continue. So that was the poll, and now we have seen the first part of the structure of the standard, and let me make you familiar with some of the appendices of that standard. And in IPSASB standards, it's especially in the last 10 years, it became usual that a standard also contains so-called application guidance. And application guidance is not only nice to have. Application guidance, the IPSASB is saying that is part of the standard. So therefore, that application guidance also needs to be applied. And what we will see tomorrow with regards to what information needs to be disclosed, this information, the details of that information is really provided in the application guidance. So I would just like to highlight to you, it's not just the body of the standards, it's also the application guidance of the standard that is relevant in terms of application. Then Appendix B, these are the general requirements for climate-related disclosures. That is more or less the equivalent of IFRS S2, and that part contains some general principles around climate reporting. Good. Yeah, then application guidance around the general requirements for climate-related disclosures. As said, that's part of the standards. Then Appendix C, we do have qualitative characteristics for sustainability reporting, and you might know that the conceptual framework of the IPSASB also contains qualitative characteristics, and these principles and these characteristics are reflected in these appendices, especially in the context of sustainability reporting. Yeah, and then there is a basis for conclusions, which is relevant because that explains to you the rationale why the IPSASB has made some choices. For example, when you are interested in this materiality issue, you can look up the basis for conclusions and see why the IPSASB has decided to go with the materiality concept of its conceptual framework. Then there is an alternative view. So when board members are of a different view, then they provide their alternative view also in the exposure draft. Then what is also important, that's the implementation guidance. This implementation guidance, that's different to application guidance. That is said not to be part of the standard, but anyway, when it comes to implementing the standard, it will give you some relevant guidance around that. Then maybe related to the questions on the reporting formats, maybe in the standard, in the final standard, we will see more illustrative examples around the form of reporting. So that's just for illustrative purposes, and but helps definitely for preparers. And finally, there is in the standard, there will be a comparison with the requirements of IFRS S2, so the one on the climate-related disclosures. Good, the general requirements for climate disclosures, that's Appendix B, the related application guidance, and then Appendix C, that's the qualitative characteristics. They form a foundational framework by providing conceptual underpinnings and general requirements for how public sector entities should prepare and present climate-related disclosures within their general purpose financial reports. So you could say it's a little bit of a kind of a conceptual framework addressed to climate-related disclosures. Good, yeah, a climate-specific extension of IPSASB's conceptual framework. And that contains guidance around the qualitative characteristics of relevance, faithful representation, including completeness, neutrality, freedom from material error, so materiality, understandability, timeliness, comparability, verifiability. And also the concept of materiality that is addressed in that Appendix B and Appendix C. So those of you more interested in that, please take a look at there. Good, and I think I mentioned that already. Application guidance is integral part of an IPSASB standard, whereas implementation guidance that just accompanies a standard. And that's now today our final poll question. So over to you, Olga, on the reflection on the purpose, objectives, and structure of the standards.
Thank you. The last one for the day, as mentioned by Jens. And please let us know, what do you think about IPSASB SRS overall, its purpose, objectives, and structure as discussed today? Any thoughts, positive, negative, recommendations possibly, discontent, any emotions and feelings you might have about the standard, please share them with us. Any thoughts?
Seems not to be an easy question.
Okay, wonderful. We have a response. Even if it's just an agree or disagree, that is also very useful to know. It's complicated, closely linked to IFRS 2, clear. Purpose objectives are very admirable. Thank you for your feedback. Please keep it coming in. I think we have themes coming through throughout the day, is that it will take time. So it will need time to adopt and implement. It is not easy, it's a complicated standard, but it seems to be fit for purpose. I think this is the general sense that I'm getting. Jens, what do you think?
Yes. Of course, one of the questions that I saw was around getting more guidance around how to implement. And I mean, that refers also to this sustainability implementation group of the IPSASB, which are really trying then to share their insights around implementation with constituents. So the IPSASB is aware of it. So I guess there will be support around that. Yeah. No, but generally, I think, yeah, Olga,
yeah,
please.
sorry, go on.
No, I think the comments that are coming in, they really, are encouraging to at least for the moment. This needs to be the way forward, and that's quite encouraging. Yeah.
Yes, it's great to see the positivity across the comments, that it does promote climate action and sustainable development. Brilliant. I think we have a good sense.
Yeah,
of,
I think so.
Of the views. And we have, I think, 5 minutes left before we need to wrap up. So I will close the poll, if I may, and pass over back to you, Jens.
No, let me look to my slides, but I think with that we are really through. So I don't know, Sarif, do you maybe have some closing remarks?
Thank you, Jens. No, not particular remarks, but I'd like to thank everyone for very active participation. I think today's session and the participation did show that the session was interesting for our colleagues, and we encourage them to join us tomorrow and the day after tomorrow as well. And please have your comments and feedback coming in to us through chat, through Q&A, and as well as when we run the polls questions. And please don't feel limited by just having a few minutes or two to answer to the poll questions, because we will also be running a detailed survey after the workshop, and you would have the opportunity to reflect your collective thought on behalf of your organization as well. So thank you very much for today's session and participation.
Yeah, I think we could close the session and hope to see everyone tomorrow. Have a great day.
Great. Thanks a lot, JP. See you tomorrow. Thank
Bye-bye.
you. Thank you all. Bye-bye. I have to leave because I have an appointment. So maybe we can catch up by email later on. So
Yeah,
thanks
sure.
a lot. My voice is now a little bit scratched. So
Thank you,
all the
sir.
best. Yeah. See you. Bye.
Thank you.
Bye. Bye-bye.